Okay, good morning, good afternoon everyone. Thanks for joining the Saturday live stream. We're going to give it just a couple minutes before I really get into the charts and the content. And these live streams are really for the subscribers of my channel. We look at charts, we really analyze the past week and then look for trade ideas for the next week. That's kind of the goal of these live streams. And then also going through any subscriber stock picks. I find that these live streams are a good tool to go through the charts that you guys want me to look at. Again, I can't see all the charts. You know, there's all kinds of stocks and trade ideas out there all the time. Some better than others, and you know, I don't see them all. So I try to point out the ones that I do see on my weekly videos, while also giving general market analysis and my thoughts on where the markets are going, and then the technical reasoning behind it as well. And then, you know, but if I don't see a chart or I don't see something, then these live streams help us follow that stuff. So thanks for joining again. Make sure the audio, you know, just let me know in the comments that the audio is good. I'm always looking for an audio check. And we'll get started here just in a little bit. You know, this last week was definitely a roller coaster week for trading. It was a very profitable week for myself, and we had a little bit of give back. We had to give back a little bit of profit. That's the nature of it, right? We're never gonna, you know, you try to get as close to the top and the bottoms as you can, but again, markets are, you know, not always predictable, so you have to manage trades, and that's the part that I teach in my course. I teach chart analysis and how to use technical analysis to spot trade ideas and how to read the charts. But then the other part that I teach is like risk reward management and just risk analysis, basically, and managing trades, which is also the other part of trading. So it's very similar to gambling, I guess. If you go, you know, I like to go to Las Vegas. If anybody likes to go to Las Vegas, you know, a lot of people will have a good hot streak, but they'll end up walking out of the casino losing it all because maybe they know how to play the game, or, you know, the games are all rigged anyways, but maybe they know how to play, but they don't have good money management. You know, they're not able to you know, assess risk. And if you play poker, there's a thing called pot odds, which gives you, you know, kind of tells you it's a risk reward. You know, if you bet this much, you can win this much. So it's very similar, you know, having a risk reward analysis. You want to risk a certain amount to make a certain amount, you know, and you never want that to be a one-to-one. Because especially in trading, it's, you know, you're not going to be accurate and right 100% of the time. So, you know, and if you have good risk reward analysis, you don't have to be right all the time. You know, you can actually be right less than you are wrong and still make money if you have good risk reward analysis. You know, if you're risking $1 to make $3 or risking $1 to make $5, you don't have to be right 50% of the time. If the ones that you are right, you make that $3 or $5 for every dollar you risk, and if the ones that you're wrong, you cut your losses short. All right, so let's go ahead and get into it, and we'll let people trickle in as they realize I'm doing a live stream. We're going to start out today with the broad market analysis and just look at kind of where we left off on Friday, and then we'll get into some individual charts. Okay, so SPY, pretty impulsive bounce off of that rally. Now, if you look at the target on the daily chart, we did hit that bear flag. It did really play out, and so if you go like this, measure your flag pole, and then I got the flag marked out, and if I take the flag and drag it down to about the point where we broke, what you want to do is you want to take the breakdown point and about the high. So here's your breakdown point, or the resumption of the flag, and you know, the high of the flag is, you know, right in there basically. And there's the target, and it was about 409, and you can see we gapped down and opened at 410.81, right at that support level that I had been talking about for a long time. So these are the levels that I had marked out. I was looking for a little bit lower, but again, I did have that level marked out as a support level, and we opened the day right there at that support. So again, you had a flag, a measured target being hit right at the open. You also had we're opening at support, okay? So, that makes sense. Everything makes sense on the bounce and why we saw that bounce, okay? Now, on Friday, we saw more follow through, okay? So, in general, that's bullish, and we had this bullish divergence that was set up, all right? The gap down here was a higher low. So I was talking about that divergence for a couple days, saying, okay, it's here, so we got to pay attention to it. And pretty impulsive bounce. To me, this looks like a bear market rally. It doesn't, it could be the bottom of this correction. But the thing is that the uptrend, there's a lot of work to do to say that we're going to make all-time new highs. That might happen, We'll watch the levels as we approach, but we got to watch these key resistance levels as we approach, because if I go to the weekly chart on SPY, here's the uptrend line. All of 2021, well, maybe not all of 2021, but a big part of it was within this uptrend right here marked by the red, where they had recovered that major trend line that I've been watching. That major trend line comes off of the 2009 lows. So here's your bull market on the weekly chart, going back the last 12 years, basically. And you can see all the tags of support. Now, every time we've broken this trend, the Fed has gotten involved in a major way. So here, this is the repo thing. If you guys remember, we had a repo. The Fed, there was some repo thing, and I don't fully understand what the repo stuff is, and I don't really care, but I do remember the Fed had talked about that they needed to get involved in the markets because of like tax losses or something, some BS thing. At the end of the day, the Fed is just trying to prop the market up. So that's why I say the market has really been trading on the Fed for the last 12 years. All it cares about is the Fed. It doesn't care about the Russian crisis. It just cares about the Fed. And we got a Fed meeting coming up here in March. It's a big one. We can talk about that here in a second. But the Fed got involved here. It really, Christmas Eve, when there was, the market was down about 20%, and the Fed was hiking rates and reducing their balance sheet, and they did the 180. All right, that happened right there. Then, so that set us up for money pumping and rate cuts for all of 2020. Then COVID hit, and they went parabolic with money printing. So now you've got pretty much zero interest rates and massive inflation. And it's pretty much runaway inflation at this point. When you're seeing a 0.5% increase per month, doesn't mean that's going to continue. But if that does continue, if that trend continues, that's pretty much runaway inflation. And as it gets worse and worse, I don't know if it will, but as it does, it should build on itself, because people will start to see their money increasing, continuing to lose value, and so they'll start to buy things, and it's just it's just how inflation builds on itself. So until that trend changes, we start to see data showing up, and we have inflation continues to build. So the Fed's kind of stuck. They can't do any money printing, and they have to hike rates. All right, and look, we've got the sell signal on the weekly right there. Okay, so this sell signal is probably not gonna. This is a long-term sell signal, and so this correction that we saw in this big recovery last week, to me, doesn't mean that we're just going on to make new all-time highs. We got a big weekly sell signal, probably going to play out for more downside over time, even though this week we saw a bounce, and we could continue a little higher next week. So I want to point those levels out. To say that we're going to go on to all-time new highs, we'd probably need to recover this trend line again. All right, we do that, we're probably going to go on to all-time new highs. And at that point, we probably should just flip bullish and say, okay, we're going to continue this bull trend that we saw in 2021. But until I see that, I won't be flipping bullish. I'm really more looking at sell the rip. Okay, I'm still looking at sell the rip. And that's the bigger picture stuff. Now going to the daily chart. All right, on the daily, where do we bounce to? And where's levels that we, maybe bounce to? So I'd be looking at the 200-day moving average. All right, we're pretty close to it. We're only about 1.5%. They're probably going to try to make another test of it. With the momentum from last week, it's probably good to carry us up to the 200-day, I would say. And there's another level of resistance right up here at about 450.33. Okay, so this is kind of a zone of resistance, but 450. This is another level right here, 453. It's about 453.90. We'll call it 454, and then the trend line. Okay, so any one of those levels are potential levels where you would, where we could get a turn down. What I'll be looking for is divergences to show up on the 60-minute chart first, and then we'll roll out and see if they show up on the daily. But yeah, so that's it. I think we're probably going to continue a little higher, hit these levels. We'll look for the negative divergences starting to show up on the 60-minute chart. That'll probably give us an indication that this counter trend rally is done, and then we'll look to reshort. Why do I say counter trend rally? Well, look, obviously since the beginning of the year, we are making lower highs, lower lows. All right, so nothing's changed. We are in a downtrend. When can we say this is? When can we say the downtrend's over? Well, again, when we take, basically when we take out that weekly major red trend line. And I don't think the downtrend is over, personally, just because that weekly breakdown, that weekly sell signal, we had a major, going back to the weekly, guys, we had a major bearish engulfing candle here on the weekly, way up here. This is what cued me in that, okay, I think the bull trend has ended, and we're likely at a minimum starting a correction, and at a and then potentially a bear market. So that's played out. That has been the top so far. We then had a big sell signal. That's a huge sell signal, big red breakdown candle, and we're getting some volatility, which makes sense. You're going to get that, especially in the beginning of if you're going to go into a bear market. Bull markets, especially this kind of a bull market's not going to die easy. So you're gonna get a lot of chop. We just have to ride through it, trade through it, watch our levels. All right, so that's what I'm looking for, and I'll be looking for on the daily chart again. I'll be looking for rallies into these levels. Then once we get in there, I'll start flipping over to the hourly chart and look for the negative divergences. Okay. I'll start looking for indications that, okay, maybe it'll look something like this. Maybe we pull back a little, then we rally up like that, then maybe we get the negative divergence. So it'll look something like this. This will roll down, then it'll rally, but make a lower high. It'll be like that. I'll start talking about it, saying, okay, we have negative divergence on the hourly chart, meaning we have lower momentum with a higher price, looking for the reversal. And then what we'll do is we'll just mark out the hourly chart like that, and we'll look for the sell signal. Okay, we'll look for a break of the trend line, and that'll be our sell signal and the indication that, okay, that rally's finished and we're heading down again. So that's what I'll be looking for, and until then, well, I'm probably going to rally a little more. I went home into the weekend flat, not completely flat. I still have some shorts, but I don't have any index shorts. And I was pretty loaded up on those index shorts, so those are the first ones I typically pull when I see reversals and things like that. Very, very profitable for me. Had to give a little bit back, but no big deal. Still very profitable. Again, I was looking for us to hold this resistance level at 430.65. We did not hold that. Obviously it was rallying, so covered those and went home flat on the index shorts. I still have this one, SOXX. We'll see. It wasn't a huge position for me, but I still kept it short. And this one has, you've got this bearish rising wedge. We overshot it, negative divergence. We're kind of chopping around. They recovered the 200-day and that trend line that I had marked out on Friday. So I'm not going to give it much room. But, so if they start moving it up on Monday, then they're probably going to go up to this trend line right up here. And then that's probably where it makes sense to look at shorting this thing again. And that would be, from where we're at now, another, 6-7%, something like that. So that's fine. If it wants to rally up there, I'll reshort it up there most likely. Again, I'm not 100% going to reshort it up there. I'll need to see what the charts show me. And then things like Qualcomm, I don't see, I've been short through all this chop. All right, I'm already profitable. Again, I was shorting the thing right up here at this trend line right there at 192.16. So we're still profitable on the trade. No reason to get out of it. Could rally up to this 173.83 area, and then probably gonna sell down from there. I don't see it going much higher, but obviously they could ramp it all the way up here to 192. They could even do another spike divergent high. They could break this and run up and make a little divergent high. All right, I don't know what's going to happen, so we'll just have to take what the charts give us. All right, so that's my thoughts on the market. Sorry guys. Let's look at Triple Q here. Triple Q. All right, so there's Triple Q, and again, I was looking for this area right in here at about 341.73 to hold. They ramped it up into the close. We have a potential downtrend right here coming off the highs. Maybe there's a downtrend right here, and that's where they want to run it up to. We still have a clear downtrend, guys. It's lower highs and lower lows. So the area of resistance I'd be looking for is probably around that 352.50 area right in here. All right, we'll watch that level as a key level. All right, if it runs up, hits that, they'll probably overshoot it a little and then breaks down. All right, that's going to be a tell. So we'll look for divergences showing up on the hourly chart first to give us a heads up that this counter trend bounce is done. And that's it. And again, the bounce was forecasted by we had negative divergence. So when they gapped it down on Thursday, it was near that support line. Not quite. It was a little shy of it. 316.50. Yeah, it was a little shy of that level. But again, the SPY was at that support level, and it had bullish divergence. All right, there it is. All right, so that's what I got on Qs. I went home flat, Triple Qs. I don't have a short on it right now. I still think we're in a bear market rally. I'm still looking to sell the rips if that changes, because that's only going to change because of price action and because the charts. We already have bullish divergence, so it makes sense that we would continue to rally. But I'm looking for these resistance levels to hold. If the resistance levels don't hold and you break out, then we could have ended the correction in Qs, and we might be on to the next bull run. And I don't know what's going to happen, so I'm not going to try to act like it. Although I do, I think it's sorry guys, I'm flipping around here. I do think it's a bear market rally as of right now. If I look at the weekly chart, we had that big bearish engulfing candle right here back in January. Or sorry, it was right here back in November. This was a bearish engulfing, and before the Russia stuff, and really before anybody was bearish, this bearish engulfing showed up on the weekly. When I saw that, I said, okay, that's that could be a reversal or a top or a near-term top at least. Doesn't have to be the all-time top, but it could be a near-term top. And then we got a follow-through candle, and that's what you look for. You look for a reversal candle, and then you look for confirmation, which is another selling candle, all right, to show a top. And we got that on the weekly chart. So as I started to see that, I talked about it in every single video back here saying, this reversal is still here, it's still intact, hasn't been taken out, so I think we're still, topping out. And that's what cued me in, going back to the daily, that's what cued me in to get short. Basically right here is where I got short, January 4th, okay? And that's, it was all part of that analysis way back then. And there was negative divergence and all that. So now we have bullish divergence on the triple Qs. We are, have a downtrend, a potential downtrend line. It's not my favorite downtrend line, guys. I'll just put that there because, look, I only have this point and really like this data point here. Not a lot of reactions. So I'm more interested in the horizontal resistance levels. I like this one right here at 352.28. You can see all the reactions we had here, then we had one here. Kind of chopped through it a little bit, but it did, once you can see it was trading around it. See how it was holding as resistance right here, and then it broke above and it was support. All right, so I'd look for that level at the next level of resistance, 352 area. All right, we'll look for signs of a reversal there, probably showing up on the hourly first. Gold. All right, gold. All right, so I don't know. Gold's probably going to come down and test this breakout point. That's what it looks like it wants to do. The miners actually look relatively bullish. So we might have seen, just because gold sells down a little bit more doesn't mean the miners always are going to sell down. The miners might front run that. So the miners might have already front run it, I guess, and maybe gold sells down and the miners kind of hang tough and then they start to rally in anticipation of gold holding here and then rallying. That's completely possible. But on the week, well, we'll just stay with the daily. On gold, little breakdown candle there. So yeah, could come down and test that 1850, 1844 area. And it should hold. If it doesn't, then we've got other things going on. So this might have been a false breakout, all right? As of right now, it is a breakout. And it's a breakout of this big triangle pattern. Okay, but if that doesn't hold and for some reason it comes down and it breaks through here like that, then it would make sense to get out of the, in my opinion, exit all the gold positions because that's really bearish. All right, to have a breakout, a false breakout, and it's faded, that's really bad for gold. So if that happens, I would look. If that really happens, I suspect gold's going to come down to this level at 1570. That's kind of a key level that was in play back during the last rally. So there's your last bull market in gold right here. And once it topped out, it held that level right there as support. All right, so that's what I'd be looking for is a move down to there. But as of right now, I'm bullish gold. I see this as a breakout, and I'm looking for a potential back test and then to do that. All right, that's all I see in gold right now. The miners, like here's Barrett Gold. I'll just look at one of these, kind of flagging out a little bit, bull flagging. So you've got the flagpole here, and then you're building this flag, and it looks like it wants to continue higher. So on this one, we can kind of mark out the target, the projected target. You've got, I probably need to look at the hourly to, something like this. Yeah, something like that. It's not like there, it's not the cleanest, but, and then if you go to the daily, it's a big flagpole. I mean, Barrick had a huge run. We move it up like that. Yeah, it's right in that area. So Yeah, the target's putting us up around 20, 27. And then I've got some, I have a resistance level right there at 28.50. So, or sorry, 28.30. All right, so that's where it's projecting us to go. We'll see. All right, I want to point out a couple of those trade ideas I talked about on Friday and just kind of follow up on those, and then we're going to get into, and then I want to kind of cover oil, and then we'll get into your guys' charts you want me to look at. All right, pins. All right, this is a catch a knife, falling knife trade, but again, they can be extremely profitable if you catch, if you find the right entry point, and I don't know, I think we got it. So we'll see. On pins, if you look at the high to the low, pins has come off from the high down to the low 75%. So it would make sense that it's due for a bear market rally. This is in a bear market, or this stock at least. But stocks don't just crash completely. They don't just go like this. You're gonna have these waves up and then come down, and it's gonna be, you look back over a period of years and you'll see those waves, and so it makes sense that we're gonna get a rally. That's what this looks like. On the daily chart, nice clean downtrend line. So I've got all these little tags kind of marked out. Here's another one there, and then we built bullish divergence. See the momentum starting to move up right here on both momentum indicators. I know it's kind of hard to see there on my PPO. Let me see if I can adjust that a little bit. Let's see if I can. Oh, is it there? I don't know where that. Oh, there it is. All right, there. It's starting to show up just a little bit right there. And on the PPO, and also if you roll out and look at that, all right. Oh, sorry, not that. That makes no sense. Sorry, guys. Yeah, it's just starting to show up on the PPO, just barely, and it's there on the RSI. So we have the bullish divergence. We have a downtrend line. We've got an impulsive breakout up 4%. All right, that's good enough for a breakout. The volume wasn't really there. Not great volume, so a little bit of a caveat, a little question mark. You see the volume that I have right in the background. Not really breakout volume, so that gives me a little bit of a question. I did take it long. We'll see. All right. If it had, it's got bullish divergence. It's got the stuff I'm looking for. So, what I would expect is a gap up on Monday, probably. It to kind of gap and run. Maybe gap up and run, and it should run pretty strong. All right, these ones have been running pretty strong. So, I'll point a couple out, but it looks, first level of resistance right here, about 31.10, and that's a gap fill from back here. We also had a reaction right there. This could go a lot more, but I'd be looking at least at a minimum of that, and from where we're at now, it's about 18%. All right, so I like that as a trade idea. PayPal, and I'll show you one more that's kind of similar to PayPal, but PayPal, same kind of pattern, daily chart here, downtrend line. This one gap down, so you have a downtrend line. No real, you don't have the bullish divergence on the daily, but you got it there on the hourly, and I'll show you guys. Here it is. On the hourly, you see it, and then clearly right there as well. So this was all divergent low price action, pretty much all through here, and pretty much all through here. All right, we have a breakout, and it was strong on Friday. It broke out and kept running. So looking at the volume, no, it doesn't really have breakout volume. Okay, so again, that's the one question mark, is the volume wasn't quite there, but it was making the move on a Friday. Maybe the volume will show up on a Monday. We'll see once people spot this. So I'd be looking for, on this one, if I go to the weekly chart on this one, there's the bull trend in PayPal going to 2016. on the weekly. So I'd be looking at a back test of that. All right, all the way up there at about 129. Look at a back test of that trend line. That makes a lot of sense to me. So from where we're at now, it was up 5.5%. So it's already a profitable trade. We'll see if we can continue another 16% to the upside. Probably going to get there pretty quickly. We'll see. I'll be looking to exit the trade though, right there. And if I want, what I would do if, let's say you're a bull and you want to go long this thing and you think all the selling's finished. What I would expect is we rally up, hit this, probably get a little pullback, and then if you really want to stay bullish, I'd wait for a recovery of this trend line. If it can recover, that's bullish. All right, that would be bullish, and that would tell me that this move down was a false breakdown, and we're now at major support, and this should run off and make a new, should continue in a bull trend. All right, if it doesn't recover and it gets rejected up here, then this is continuing a bear trend and it's a sell the rip. As of right now, because it broke the major trend, I'm looking to sell the rip. I'm not going to short it though. Because I'm long, so what I'm going to do is I'm going to trade, try to get that bounce, exit the trade, watch it, see what happens, and then look for, I don't know, maybe I'll short it. We'll see. It depends on what the divergences are showing me and what the other broad market, what they're doing. But right now, there's my target. All right, a recovery would be bullish, and rejection's bearish. We're in a bear market on this one, but I think we're going to get that little bounce. And looking at SQ, all right, they can't. This is earnings related, but it doesn't. It's not really earnings related half the time. Look at where SQ came out with earnings, major support. All right, I had this line marked out for a long time, and I've talked about how I thought SQ was going to go down here. I've covered it in my live streams where people, last week or whatever, when we were right in here, I said, it looks like SQ's heading down to this trend line, and we're probably going to, this is where I'd want to be long, 83.91. And as you roll out, look, resistance, resistance, resistance. Once we broke above that, it was support right there, okay? And there's another resistance right there. Let me get rid of this thing. Okay, so big level. And earnings, basically, let me zoom in. Earnings, on Thursday, we gapped down right to that major level. So, and it was a divergent low. Let me get rid of this. Bullish divergence at major trend line. It was a key level to be buying at, technically. So, boom, or I think earnings, maybe they came out after the bell or Friday morning, but it was really based off of this bounce off of this technical level. Up 26%, probably heading up to this resistance line, 135. That's where you're likely going to get a pullback or a reaction. Yeah, right there, maybe a little bit early is most likely the end of this run, but it obviously made the run in one day. It could even run, we could go a lot higher, but it still looks like a bear market rally to me. But they can be pretty impulsive and sharp. So, all right, guys. Now I'll get into your trade ideas. I'm going to start at the top here. And ASPS. All right. Hey, guys, if you guys are following along, just drop me a thumbs up. Whether you like my analysis or not, I do appreciate it. And hopefully, I'm putting in the effort, putting in the time to find these trade ideas. ASPS. All right, so there's a downtrend line here. All right, this one looks bullish in general. I'm just marking out. All right, there's bullish divergence. This is kind of retroactive because it's already played out, but all right, so there's your divergent low. I already had that one circled, so someone's already asked me about this one. But that was that was your divergent low, and you'd want to be looking for breaks above downtrend lines down there. But now you've got this major break here, and you're in a, we've broken a downtrend line. That's a breakout. All right, 1, 2. All right, back test, we held. Looks bullish to me. So if I had to pick long or short, I'd want to be long this one. Look, you don't have negative divergence. See how we're just see how the momentum's kind of lower right now, but price is lower too. So it just tells me that we're, I think price is going higher on that one, right? And what is this one? This one's kind of interesting. Finance, rental, leasing. Well, as far as I can tell, this one has started a bull market. All right, from a bear, went into a bear market since 2013. Looks to me like it's bottomed out and it started a bull market. All right, I would be long this one. Doesn't mean I'd want to go long right here and now. If you got long here at support, that's the best spot to be long, or on the breakout. You had an opportunity to grab it on the breakout or on the back test. Now it's probably going to start to put in a bullish trend, and we got to wait for, once it gets that bull trend, then you can buy at support, but I'd be bullish that one. All right, moving on. Tesla. Tesla's going to do what the market's doing. I'm still short Tesla. It's not a huge position for me, but still short Tesla. We're below the 200-day moving average, and I don't know whether it recovers it. If it does, then maybe we can run all the way up here to 1,010. But as of right now, you got the 200-day as resistance, and you've got this level here at 910 as resistance. I suspect we go lower, which tells me that maybe there's a couple days of rallying in the indices. This is going to grind around here and then roll over. And you didn't even have bullish divergence here on Tesla recently. Like, this low wasn't really a divergent low. Not on the daily. Let's look at the hourly. Yeah, slightly. You could maybe say you had slight bullish divergence on the hourly. So I still like this one short. Probably a little higher grindy action for the next week, and then we roll over. Hood doesn't have a lot of history. Looks like we are back testing, and yeah, this looks bullish to me. So there's your bullish divergence. See it? See how these momentum indicators will give you they'll give you kind of a heads up of where price is likely to go. It's not going to guarantee, but it helps you kind of get an edge at a minimum on retail traders. Professional traders, they see this stuff, they take positions on this stuff, but retail has no clue. All they do is look at price, and they look at line charts. They see price went up, they're happy, price went down, they're sad, and then they look to CNBC to tell them why they lost money or why they made money. They don't predict. It's not predictive analysis, it's just reactive, and that's why they buy on greed and sell on fear. But this will give us the heads up there. We have bullish divergence here. That was a back test, as far as I can tell, on Thursday. Probably higher. All right, so I'd look for. Now this one doesn't have a whole lot of history, so yeah, right in there as our resistance level, 1490 up to 1715. Those are both key resistance levels. And then maybe here, this would be probably a final level. It's a big rally if you get that, but because you don't have that much history, I got to just mark out the only levels I can find, 3406. All right, so this maybe there, maybe there. I don't know. I don't know exactly where it goes, but it does look bullish, so I think you probably could be long this thing for a move at least into these levels for a trade. I don't know about that one up there. All right, moving on. DRI. This is a home built, or no, restaurant. Yeah, Darden. I don't know. Looks like it's topping to me, but let's take a look. Yeah, not the cleanest. Trying to find kind of a top there. But every single top that kind of gets broke through, so maybe something like that. It looks like it's topping to me. You've had negative divergence for a while, so this was kind of your peak momentum right here, and then every little new high has been less momentum. We did make a little bit newer momentum, higher momentum there. I don't know. Not my favorite chart. I don't have a huge opinion on it, to be honest. Maybe it's topping. I would look at these levels, but see, the thing is, it's chopped through it a bunch and recovered. So if you want to give it the benefit of the doubt, just move it all the way down here and just say, here's our level of support, 131.50, a solid break below that, and it's a sell signal. Otherwise, we're range bound for over, for almost a year. All right, guys, moving on. Palantir, PLTR. All right, let's look at this one. Short-term bullish divergence on the RSI and the PPO. Not fully confirmed, guys. A lot of these bullish divergences aren't fully confirmed. They're there on the RSI, but we don't have that crossover like that. You see that? That's a bullish crossover. It's turned up, but it's not, it's not fully crossed over yet. So, but you got it there on the RSI. This one. So on this one, you've got this downtrend line. I probably wouldn't want to be bullish this thing until you get a break, a bullish break of this trend line. Again, that's just my trading, strategy. I don't want to take positions till I break resistance or support. All right, so this could just be a rally up to resistance and then get rejected. All right, so. As of right now, I would not take a position in this. If you grabbed it down here at the low, good for you. It was. I didn't see any real level down here. It's basically down at the IPO price. If you've been riding this thing and you're still in it, you obviously gave back all those crazy profits. Hopefully, that's not the case. My technical analysis doesn't allow me to get back big profits, because of the just how we analyze the charts, but every now and then they'll catch you on a move. But that's where position sizing and risk and reward analysis comes into play as well. Palo Alto. So let's see here. Probably have to adjust this just slightly, but you can see it's been holding the 200-day moving average. Bull trend here. Support. This is kind of where it started. This is COVID. So when you get big liquidity moves, sometimes you just have to throw those out, and then the real trend will kind of start after that. So this kind of flush out is we just disregard that. And you can see there was two gaps. It was actually an island. This one, look, island cluster bottom. See that? See the island gap down, gap up, island cluster bottom. Okay, so that's what we got going on there. So there's my trend line that I like. Support, 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 support. Whipsaw, I mean, definitely a bear trap. 100% a bear trap on that one. You know, but the thing is, look, this is not a breakdown that I would have taken. Yeah, you broke the trend line here, but you did it with bullish divergence. At least let's double check to make sure we had it. Yeah, you did. So look, bullish divergence there and here. This breakdown right here occurred with bullish divergence. So I never take breakdowns that have bullish divergence, and I never take breakouts that have bearish divergence. So that would have kept you out of the trade if you would have used my, my strategy. And then, boom, bear trap. So in general, this one, here's what I think is going to happen on it. Look, you have negative divergence. The bigger picture is you've got a big negative divergence here. And did we make a new high? We did. All right, there's a divergent high, another divergent high. Isn't that crazy how they do that on 2 days? Run up, make a new divergent high. The next breakdown that you guys see on this one, if you get a breakdown, is likely the real deal, and this thing's probably going to start a bear market. The first target on this one that I would target would be this gap fill down here. You got two levels, gap entry and gap fill. All right, all right. Those are the levels that I would target if you get the next breakdown on this to the downside, which I think you're going to get, to be honest. Now, what I'd be looking, this is actually a potential short trade. Now it's higher risk. But what I would do, we just made a new divergent high. Again, this has negative divergence as of right now. So unless they can continue to run this thing higher and burn through the negative divergence, this is likely the top or near the top of this pretty impulsive 2-day run. What I would do on this one is go to the hourly chart. This is a really steep angle, but maybe we can do something like this. Or you could even look at like a 5-minute chart, because the angle is so steep. Something like this. And don't really have negative divergence yet. So what I'd be looking for is, yeah, you almost have to go to the 5-minute chart on this one to find an entry. See the negative divergence on the 5-minute? This is more of a, almost like a day trading entry, but you've got some negative divergence on the 5-minute. This is going higher. You get that break of this trend line on the 5-minute. That's probably your sell signal. And you might catch the top on this thing. There it is. Something like that, guys, and you might catch the top on this ripping move. And then what I would be looking for, if this is going to be a divergent high, well, it is right now. So to me, it tells me that this is just about the end of this run, and then it's going to trade back to this trend line, and then I suspect it'll break the trend line. Doesn't have to. So one thing you can do is just trade it down to the trend line, exit your short position. This is what I like to do. If I can catch this top here and it trades back to the trend line, I can exit my short trade, take some profit, and then wait for a break at the trend line to re-short it. You're locking in profit and you're limiting your risk, and then when you get a bigger sell signal, you can take a longer term position. All right, so I actually like that as a short idea right now. But again, I'd want to see that 5-minute break. That's where that shows up. I'll be looking for that on Monday. That's actually a decent trade idea. If it continues higher and we burn through the divergence, then it's not going to, likely break that 5-minute break, and there won't ever be a trade. But that's what I'm looking for on that one. So that's a good idea, guys. I'm going to write that one down. pay attention to it on Monday. All right. All right, guys. GPL, I have been talking about that one, but it hasn't really triggered yet. It's, here it is. I mean, yeah, it broke. It's above the trend line, but it's not a breakout. It's not impulsive enough. So on this one, I'm just not interested. It's a penny stock, so when this one breaks, it's going to break pretty big, I suspect. But I don't see a reason to be in it yet. And, you've got this downtrend line here. Bullish divergence. It's been building for a while, so we should get the break soon, but I don't know when. And here's the thing. Bullish divergence is not a reason to just get long a stock. This could run down and make a new divergent low, all right, and still keep the bullish divergence. So I'm not interested in being long until I see some sort of a big buy signal breakout. And then it's probably going to be a day trade, to be honest. You're probably going to get maybe a 1 or 2 day trade, maybe 3 days. You'll probably get that buy signal. It'll run up, gap fill, and that'll be it. That's the trade, in my opinion. But that gap all the way up there from where we're at now is 62%. So again, I don't see I'm not in it. It's very similar to the COE. This was that China education one. We had the buy signal right here. We had 3 days of rallying right up close to resistance, and that was it, And this could go on and hit the next one. That's possible. I just grabbed the first move and I got out of it. It was a really strong move. I mean, from the breakout, even if you got it at the very end of the day, you still made 119% in 3 days. All right. All right, let's look at what we got going on. HNST. Is this a SPAC? Farmer? I don't know what this one is. Honest Company. Yeah. Well, if it's a YouTube Mania stock, they've been getting bombed out on the thing. All right, there's a gap. Bullish divergence. Maybe that. See if I can mark a different trend line. I can't really mark a different trend line, so I'm just going to have to go with the one that I have. I wouldn't be interested until I saw a bull break of this trend line, so it's got a ways to go. It's got work to do. I don't see anything. Maybe a setup, but again, we got to see that bull break. A couple more guys, I'm going to wrap up. What's TU? Is that TransUnion? Is that Thales Corp, I suppose? Negative divergence. It's been building for a while, but recently this move higher burned through these former highs, so it's not my favorite when I'm trying to spot negative divergence. There's a trend line. Looks like it wants, it's about the 200-day, but I'm sure I can collect that. Okay, there's the recent bull trend. Oh, sorry guys, hitting wrong buttons. I like that one right in there. I don't know. This one's a little confusing to me. So we have a bearish rising wedge here. But we also have that, you know, I mean, it is negative divergence. This breakout has not able, you know, hasn't broke above this momentum. So we'll see. It is a breakout right now that has negative divergence, so it's not my favorite. But it did break above these recent highs here. And it also broke out and back tested and is running, so I don't think I'd want to short this thing, to be honest. I'd rather be long, I guess. Let's look at the hourly and see what's going on with this move here. See, this is a divergent high, but it's not confirmed. See, the hourly hasn't turned down, the hourly RSI, and the PPO still pointed up. So this could continue higher and burn through that. So again, I wouldn't want to be short. Let's just put it that way. I'd rather be long. I wouldn't want to take a position here, but if you're in it, maybe you just stay long. I don't know. DraftKings. Bullish divergence on the RSI and the PPO. We didn't have it before, but we have it now, the bullish divergence. All right, so that's a divergent low. It's pretty common across all these. You know, basically, I'm seeing a bear market. I'm seeing the potential bear market rally in a lot of these speculative kind of meme stocks and these, not necessarily meme stocks, but these are like the ARK Invest kind of stocks, and they've all been destroyed, and it looks like we're going to get a bear market rally in these things. That's what I'm seeing across the board. So, you know, that's why I'm long PayPal and I'm long pins. This one, I don't really like that trend line. I have to move it. I have to move it to right here, guys. Only because of this price action, and we went below, and so I have to move that trend line there. And then I don't know if it, yeah, not my favorite trend line. We'll just mark this. So I don't know, a little bit higher, you probably get that breakout. It's just like, why would I want to trade this? I mean, it looks like a bullish setup to me, but why would I want to trade this when I got something like PayPal, or I got something like pins? Like, look at that downtrend line. That's a much cleaner downtrend line where I don't have breaks through it, and I've got the breakout. So I'd rather trade this, you know, like, in my opinion, I like this chart better. So, all right. Fed. Yeah, they're the 16th, I believe. I know because I'm going to Vegas on the 17th, so the day before I head off. AMD. AMD, for me, I look at the weekly chart on this one. This is 2016. Here's your uptrend line on AMD, your bull trend. Looks like we broke trend to me. You know, this thing got real sloppy, and so I kind of gave up on it during this time because you broke and then you recovered, and then it just, but this trend line was holding so cleanly for many years, and then, or you know, it got so choppy through here. But that's a sell signal, okay? See that breakdown? Look at that big red candle. I can't find, you go along this trend line, there's no breakdowns candles like that one. Even through here, they were just little breakdowns. This is it's the biggest candle breaking that trend. Excuse me, guys. All right, so I think we got a sell signal. You know, they're trying to hold the 200 on this one. I gotta go to a smaller time frame. You know, look, they're trying to hold the 200, but I suspect it goes over time. You don't even have bullish divergence on this one. So see that? Look at the momentum. You have momentum moving higher on both RSI and the PPO. We didn't make a new low in price, so just higher, higher, higher. That tells me that this is a counter trend bounce. That tells me that this is a sell the rip chart, and we look to short into resistance. Usually a reversal you want to see with divergence showing up. This is not divergence. So I would look to sell the rip on this one. Where do we go? Well, I got to almost go to the hourly to find it because it's just kind of sloppy through here. Maybe there. I only say that because you got a reaction here, reaction, kind of a reaction. 125.36. Again, I wouldn't wait for the very penny. I'd probably, this is consistent with where the market looks like. It looks like it wants to rally a little bit more, just a little bit more, and then we're going to sell down. So I'm looking to re-short this thing, a little bit higher. All right, so I would look at that level and see if I'm missing anything. It's almost a pennant. We're almost making kind of this pennant price action, or isometrical triangle, I guess is another way. So maybe it wants to run up and do that, but all right, that's what I think is going to happen. It's hard to say, but I'm just going off of the major trend has been broken with big weekly negative divergence. Okay. So look, as we're climbing higher here, we're building negative divergence right through here. Broke the major bull trend, and I think it's probably a bear market play, I don't want to tell you guys that we're in a bear market when we're way down here in AMD, and when the market's way down here. Hey guys, we're in a bear market. If I'm doing that, I'm like all these other YouTube millennial guys that just follow headlines, let's report on the news. Like, they're like all like news reporters. I don't care about the news, all right? I care about making money. And in order to do that, if this is going to be a bear market, I have to analyze it when it's up here, and then take, get positioned for the move down here. All right, so, when it's down here, I'll tell you you're in a bear market, and we'll be looking to take our profit. When everyone else is telling you that you're in a bear market, time to sell or whatever. I don't know what they tell you, but that's what I see on that one, guys. We'll keep an eye on it. So Teladoc is probably a long trade. I know, yeah, see, bullish divergence. It doesn't look actionable yet. Yeah. I don't like that one. I just go off this pattern right here. Let's look at the hourly chart. All right, so you've got a bullish divergence on the daily. I'd wait for a breakout above there. Otherwise, no trade, but there's no buy signal yet. And then I think this is probably a level right here, guys. $88.65. We'll say that's our first level. So depending on if you get the break, 21% rally, it's not bad. Maybe it goes higher. You've got another level up here. At 132.85. Okay, I'm going to do one more. For anybody that's new, if you found value in this analysis, guys, hit the thumbs up. I do appreciate that. And if you want to learn a little bit more and refine your skill set and not just kind of follow all of my videos, take my course. All All right, I'm going to teach all these concepts in about a 4 to 5 hour training videos. I broke them out into different concepts to really, teach you each individual concept and then put it all together. I've got a checklist on there so you can kind of run by, check everything off when you're looking at a trade idea. And that's it. It's basically putting trade ideas together, looking at all the analysis, taking the trade, and then managing risk. So those are all the concepts I teach in my course. You do that over time, you should be profitable. No guarantees, of course. Can't guarantee it. But, if you stick to your rules, stick to your trades, then, it also helps control your emotions because you're now trading off of technicals and off a plan versus just, looking at a 1 minute chart and FOMOing and jumping in on momentum and not knowing when to get out and just, yay, I'm so rich. Oh, I'm so poor. That's not a way to trade. So check out the course if you haven't done so. Link in the description below. And it's not expensive. I priced it at $99. I just figured, you know what? I want to make it accessible to everybody that is interested in learning that skill set. All right, guys. Which last one would you like me to do? I'm going to do one more. And then we will, we'll watch AMD when it starts to break and show sell signals. If I get interested on it, I'll let you know, where it could go to, but it's a ways, I'm sure. All right, last one. No, I'm not bored with the momentum stocks, guys. They're longs, so I'm going to grab some of these longs and see if I can't catch this rally that looks like it's set up, and then we'll exit, and that's it. I don't really care about a stock for the most part, as long as the trade idea is working. That's the fun part, is when you analyze a trade, you put the charts together, you read the chart, and you read it correctly, and then you catch the trade. That's what I like. All right, I need one more. Should we just do BABA? I know I've been talking about that one. It's been a tricky one. See why I quit getting it. See why I gave up on this one a while ago. It looked like it was building a bull bottom, but then they gap it down. I mean, man, if that's not a flush out move, if you were long this thing and you didn't get out right there, then you probably are going to deserve to make the profit if it goes higher. Bullish divergence, still there. It's been building for a while. I don't know. I'm still kind of waiting for a break of this trend line here. Just with how choppy this has been, I'd rather just wait, give back a little potential profit, but wait for a bull break, and then we'll trade this thing up. We've got the divergence. It tells me we're going to get that bull break, but I just don't see it yet. 148.84 is a level of resistance. Another level right here, 160, 140. That would be a target for me, 160, 140. I think you probably get that. This thing's in a bear market, so that would be about it I'd want to go for. Depending on when you get the bull break, we got maybe 20, about a 22% profit, all the way up to a potential 40% profit. That's as far as I'd want to carry that thing long. Either one of these. I could take profit here, I could take profit there. It'd be a successful trade either way, guys. Okay, I got to get going. So again, catch you guys later. See you guys on Monday. Thanks for joining. Bye.